Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, February 17th, 2022. Well, the market did make clear its intentions today. We did not get any additional upside over what we saw yesterday. And I'm going to start here on the 4-hour chart, first of all, so I can update the count, and then we can take a look at how far we've come and how far we likely need to go. So again, quick update. Here I still have this high, which is 16,768. And that's the marking that I have for the intermediate 5, primary 5, cycle 5. Now, so that we're starting our cycle degree correction. And within that, we have formed what I believe is wave A and wave B. So those are intermediate wave A, intermediate wave B. So now we're in an intermediate C wave. And within that intermediate C wave, there'll be 5 waves of minor degree. So we have the first wave, we have the second wave, and now we begin to form the minor third wave, which again under Elliott, the longest and the strongest out of a 5-wave sequence. So out of waves 1, 3, and 5, and an impulse, wave 3 is often, most often, the longest and the strongest in terms of depth or height, depending on the direction that the market is going. In this case, the market is declining. So I'm now going to show you that this is how far we've gotten thus far. So there's wave 1. Let me just open this up so we can just take a peek. Come on. No, I don't want to do that. How about that? There you go. So there we have the top of wave B. We have minor 1, minor 2, minute 1, minute 2. So you can see that minute 1 went from 15,062 and bottomed at 14,031. So that was 900 some odd NASDAQ points. Now, the second wave completed at 14,678. Let's see. Yeah, 14,668. And now we dropped today. We did finish down 432. We're still putting through some closing orders and they're trying to mark things back up again. But we are down over 400 and we're just in the beginning stages. So I'm going to break this down even further so I can go to that hourly chart. But we definitely, as a third wave, will take out the low of wave 1 at 14,031. And the most common relationship for a third wave, when comparing it to the first wave, is that it'll come in at 1.618 times that length. So there's 618, here's 1382, here's 1.618 at 12,990. That's the expectation that I have right now. Definitively, this is where it would be equal to in length to wave 1, acceptable, but not if wave 3 is going to be the longest and the strongest. So the minimal would be 13,631. It also can find support and complete down around this 13,359 area, 360, 359. But more often than not, this is where it'll come. So we're at 14,165 getting ready to close our session. We're in the aftermarket. And this is what I'm looking for. So that is 1,100 points in addition. 3 days of down 400, we're there. But I digress. So let me go down to this hourly chart, but I wanted to show you in terms of the depth that we need to get to in order to make this all work, because here is wave A. Wave C, again, would be expected to take out the low of wave A, which is 13,706. So we have 2 interim goals here for this wave. And one, that it needs to break 14,031. The second is that it needs to break 13,706, all on the way as it finishes a third wave down. Okay, over to the hourly chart. And we can take a look at some of the internals in here. Now, yesterday I had left this open. Come on, let's do this right. Okay, kids, please. Come on. My computer gets really kind of tired by the end of the day. There you go. So here we have wave one, minute wave one. So minor wave two finishing up here, minute wave one. Now minute wave two. So again, within that minor third wave, we're going to have 5 waves of minute degree. There's minute one. Here is minute two. We had left this open yesterday with the possibility that they were going to pick up this rally again. Don't forget, this was on the, oh my God, they didn't raise interest rates yesterday, nor they didn't come say something negative, because they just repeated news that we already knew. But nonetheless, this is what the market did, and then they kept it going. So that ends up being, we're going to be in minute wave 3. Here is 1, 2. Now we're in the third, which is subdividing more than once. In fact, if I had to count it, I would be 1, 2, 1, 2, 1, 2, which means it's subdividing 3 times. So I'm expecting a lot from this wave already based on how many times it's already subdivided. If this is 1, 2, 1, 2, 1, 2, then this might just be 3, 4, 5 of 3, and then a 4, 5 of 3, and then a 4 and a 5. So again, it subdivides within it, it's subdividing 3 times. So we're going to have a 1, a third, a 4 and a 5 that completes this. Then we get another 4 and a 5, and that completes this. And then we get another 4 and a 5 to complete this one, and then one more 4 and a 5 to complete the larger minute 3. We got a lot of declining in front of us. So what does really improve the picture today is the fact that I can say with some support that minute 2 is complete. The decline has resumed, and the relief rally, whatever we want to call it, is done. And the pressure is back on with the imminent invasion of Ukraine by Russia. I'm only repeating the headlines. So that's got to come in. The ramifications of what that can cause globally are only being estimated and speculated on at this point. It's not happened, so we don't know. Now, also, we still have a Fed meeting in March. We're halfway through February, a little bit more than halfway. That leaves March. That's right around the corner. And then we're going to have a Fed that is going to really show us that they're serious about putting a front and a stop to inflation. Anything less than, I think the market should react negatively to. If it's just going to be a token quarter point rise, of course, the market's going to jump for joy because, all of our corporations continue to borrow cheap money. I don't think that's going to be the case. If inflation doesn't slow down, the market's going to get choked off. And anybody who has any history with the markets or history with other periods of inflation, all they need to do is go back to the mid-70s and then go back to 1980 and then go read all the paperwork that Paul Volcker left behind. And then you're going to find out this is what needs to be done. If somebody has to have the guts of Paul Volcker, because let me tell you, when he did it, it wasn't a very popular time. And he was not a very popular person, but what he did worked. Set the stage for a whole new era of other problems, but controlling inflation, it worked. So again, here we are. So what are my expectations for tomorrow? I believe that we will continue lower, pullbacks notwithstanding. But again, it didn't just, it appears that it flew down today, but if we really were to take a look on the smaller time frame charts, it just walked up, walked down, walked up, walked down, until he got some good selling, walked up, walked up, walked down, walked up. It wasn't a straight shot down. It was a lot of chip and fall, chip fall, chip fall. And so I would think that that may continue, but we'll see stronger points of selling. But we did break below 14,149. That was our support level. We got down to 131 here in the after hours, and now they're pushing it back up, getting ready to close it for our session, and then get ready for Globex, which will open up at 6 o'clock Eastern. Next up, we have 14,083. Now that is attached to the larger wave pattern, and that would be the intermediate C wave. And so, but it should provide some support, as it did here, but we eventually broke it, came back above it. More important support is going to be 618, which is at 14,027. These I would anticipate only provide a pause, maybe a bounce, but then continued selling. If we break below 14,000, see again, we've got all of our moving averages now are lined up on the hourly chart. That's the 4, the 8, the 20, the 50, and the 200. So they've all dropped back into alignment to go down. So what we have now is that we'll get little bounces off of our support levels. But as we continue to count, let's not forget that we have 1, 2, and then we have 1, 2, 1, 2, 1, 2 as we start the third. And so then we've got, 3, 4, 5, 4, 5, 4, 5, 4, 5. So it's going to stair step all of the way down. And again, I can't really consider this first, the internal third here to be done. So we will see. We're going to let the market put it in there and tell us where. So but I do think that we can get down to this level, maybe rally a little bit, break, come down to this level, rally a little bit, break, come down to this level, and we'll continue to do that. And to a minimum, I think down to 13,631. Now, the fifth waves in and of themselves can be strong. So by the time we get to the minute fifth wave, I would again expect a pretty severe drop as that fifth wave unfolds. And again, it's going to be relatable and comparable to the first wave, but also we'll have Fibonacci extensions as the fifth wave and how that relates to the third. So again, this is all to come once we get this move underway. Ultimately, as I just said, I suspect that this third has a very strong chance of getting itself down here, 12,990. That's as it relates third to the first, the third wave to the first wave. We have a lot of support in between. Once it breaks below 13,631, then any of these areas can complete it. The most common, of course, is going to be 1.618, but that doesn't mean that's absolutely where it has to go or it's not done. It can be completed here. It can be completed here. It can be completed here. This all is support, and it's Fibonacci support based on different levels. But the most important one are these that are right here on this inside, because that is for this minute third wave. Now, can it keep going beyond that? Yeah, it can. Just depends on what's going to trigger additional selling, what's going to bring it out. Is it all going to be just a little bit of anxiety and fear over an impending war, anxiety and fear over an impending interest rate rise? Sure. Anything else that might come up? Could be adding to it. So we're continuing to see some earnings results come out. Roku reported initially was down, I think 12 or something on the day. Let me just double check. Roku was down almost 17 on the day, managed to pull its way back up to 134. It was trading at 128. So now it's pulled it back up on the further information from the press report or the conference call. But here, they're moving it back lower again. So again, from the close, it's down at least another 12 right now, with $10 to $12, and possibly more by the time this is all finished. And that, that is also Roku's a part of the NASDAQ. Doesn't have a high weighting, but it is a part of the NASDAQ. In any case, for tomorrow, I'm looking for continued downside. Any strong moves from here would be a little bit of a surprise to me. So I'm thinking that we will just continue to move lower and start breaking below. Get small rallies and then continue to break below. Volatility will be, I think, stronger to the downside. Still might produce some strong upside moves, but we're going to wait and we're going to see. Continue to play it accordingly to the price action on the near term or the shorter time frame charts. Your moving averages do come into play. Let's go back and let's just take a look at the 5-minute chart. You can see that we've got it all down. See, but your 20 is sitting already at 14,181. That's not that bad. That can get up there for a rally. So if we're thinking about we should get a little bit of rally, which we are doing here, well, where can it get to? 14,180. That makes sense. But then on top of that, we have, that's the 20. We have the 4 and the 8 really hidden down into here. And so the 20, and above the 20, we've got the 50. So those will be points for rallies to get back to. And if they start exceeding this, I'm looking like, oh, okay, something bigger might be going on. So here we can start to really break down all of the 1 and the 2, and then we get a 1, 2, 1, 2, 1, 2. And then it starts again. That's a 3, that's a 4, 1, 2, 3, 4, 5, that's a 3. So that might be of this one. Now we do a 4 and a 5, and that would be of this one. Then we do a 4 and a 5, and that's going to be of this one. Then we do a 4 and a 5, and that's going to be of this one. And then one more. So it goes for a while. But moving averages are going to guide the trades. So what I mean by that is as it breaks above the 4 and the 8, you can trade it looking for a move back up to the 20. And if you know how to put in your Fibonacci, you can put Fibonacci up to realize, well, if I put it from here to here, and that's what I'm expecting to correct, then you're going to get an idea. Here's the previous 4th. I would think that this is a 4th wave right there. And then very small internal one inside of all this. So you think, well, that's really where it can come, 1424, 224. That's very close to that 50. So it all fits in. So you can use your moving averages, use previous 4ths, use Elliott, use Fibonacci. Have a great trading day tomorrow. It is expiration as well. So again, we've got a lot of options that are expiring in the weekly series. It's an options expiration. And we've already slid through a lot of strike prices today amongst all of the component stocks. So it could be wild. And our next update will be on Sunday, the 20th.